Hello everyone, welcome to today's video. In this video we are going to discuss the topic called hidden goodwill, which is from the admission chapter. So we have already done videos on hidden goodwill where we used to take the adjusted capital of the existing partners and also the capital brought in by the new partner. This is a different kind of question where the capitals of the old partners are not given. So without further delay, let us discuss the question, along with which we will discuss what is different in this question. As you can see on the screen, there are two partners, A and B. I am just calling them as A and B, or A and S, just with the first letters. And they admit Ajay as a new partner. I am just calling Ajay as C. Okay, so A, S and C with 1/5 share in the profits of the firm. Ajay brings 5 lakh as his share of capital. So whatever capital is brought by the new partner is given there. So there are three partners, A, S and C. So A is there, S is there. They are already existing partners. He is coming into the business and C is already obviously bringing capital as his capital. He is bringing 5 lakh rupees. The value of the total assets of the firm was 15 lakhs and outside liabilities were valued at 5 lakh on that date. Give the necessary journality to record goodwill at the time of Ajay's admission. Also show your workings. This is the question. So there is no information as to goodwill of the firm that is given in the question. But the question is, give the necessary journality to record goodwill at the time of Ajay's admission. Ajay means the C, okay, which we are talking about. So C's admissions, goodwill entry you have to pass, okay. So here nowhere in the question they are saying that C is bringing the goodwill. Only they told that he has brought 5 lakh as his share of capital. C has brought 5 lakh as his share of capital. So to make it easy, first of all, goodwill, as you are already aware, many of you will be aware of this. When a new person comes into the business, the existing partners will be sacrificing. So to such sacrificing partners, he may have to contribute some amount of, he may have to contribute. And this is the incoming partner or a new partner has to contribute some compensation. The compensation is basically called premium for goodwill. Okay, so that the premium for goodwill is basically calculated on the goodwill of the firm. Goodwill of the firm related information is not missing, not given in the question means basically it is a situation called hidden goodwill. It is a situation called hidden goodwill. Okay. It is a situation called hidden goodwill, which we are trying to do here. Okay, basically. So hidden goodwill situation, there are two entries actually, two calculations actually. We have to find out total capital of all the partners, including the new partner. Okay, total combined capital of all the partners. Second thing is, so obviously if A, B and C are partners, here A, S and C are partners, right? All these partners capital, if you are adding, you will get this total capital of all the partners. When you are adding this old partners capital, always remember that this should be adjusted capital. Adjusted capital means their closing capital. After preparing their capital account, after recording all the adjustments, whatever capital comes at the end of that account, that amount is called adjusted capital. So when you are considering the old partners in this calculation, so you have to consider their adjusted capital. Keep that in mind, very important. Then coming to the next step, we need to find out one more value, that is called total capital of the firm or new firm. You can call it as new firm or firm here. So for that, the formula is like this. The capital that is brought in by the new partner, here it is 5 lakhs, into reciprocal of his share. Here as you can see, he is getting 1/5 share. So reciprocal means 5/1. So 5 lakh into 5/1, obviously 25 lakhs. 5 lakh into 5/1, it is 25 lakhs. Okay, so basically these two formulas are required. So total capital of all the partners, why I didn't do is that, as you can see in the question, there is no total capital of the partners or A's and S capital. SS capital is not given. That means first partners and second partners adjusted capital is not given in the question. But to find out total capital of the new firm, the value is already provided in the question. That is why I did that step first. Now coming to total capital of all the partners, in order to find out their adjusted capital, either capital should be given there and adjustment. Say for example, when I say adjustment, it means that there are certain amounts that are coming in capital account, right? In the case of admission chapter and all, obviously general reserve will be there, profit and loss account will be there, revaluation profit and loss will be there. So after recording all these amounts, only finally we will be doing the balancing part where we will get the closing capital. So any of such information is given here means obviously we can calculate and find it out. No opening capital is given. Beginning capital at the beginning of the year is also not given. Capital at the end of the year is also not given. Basically end of the year is called closing capital and the capital at the beginning of the year is called opening capital. None of these values are given in the question. So what to do? So next option that is available is, instead of all these values, they have given the value of the total asset of the firm and outside liabilities of the firm. They have given value of total assets of the firm and also outside liabilities of the firm. So basically its meaning is, you know already last year you have studied asset equals liabilities plus capital. Okay, so here there is one more thing that you have to remember. If you are finding out the difference between this asset and outside liabilities, remember the word outside liabilities, that means any liability other than the liability that you have to pay to the inside people, okay, those who are inside the partnership. So that liabilities are called this one. So if you are doing this step, you will get the total capital of those two partners after adjustment. Total capital of those two partners after adjustment. Okay, so that is the meaning of this part. So here actually after adjustment, in order to find, we need to get the asset and liabilities after adjustment. All the adjustments are there. So I'm not going into that part so that I don't want to confuse you. Just think like whatever difference you will get as asset minus liabilities, that will be the adjusted capital of both the partners. So in order to find out that, so with that formula you can find out total capital of all the partners, right? Total capital of all the partners. Total capital of all the partners means A's capital plus S capital. We don't need individually their capital accounts. If we are able to get their total capital also, it is okay. So how to find out their total capital? You know, 15 lakh is the total asset minus outside liability is 5 lakhs. The difference between these two, that is basically 10 lakh, will be what? Obviously the capital, total adjusted capital of both the partners. So total adjusted capital of both the partners you got, and you have to add whose capital? The third person's capital. Third person is bringing 5 lakhs. So basically 10 plus 5 lakhs, 15 lakhs. 15 lakhs. Now that you got these two values, next step is obviously goodwill of the firm. Goodwill of the firm equals difference between these two values. That means first value was 25 lakhs, second value was 15 lakhs. Now what is the difference? 10 lakhs. 10 lakhs. Okay, this is the value that you will get. So 10 lakh you got. Now with that 10 lakh, what are we supposed to do? Is the question over? Now we found the goodwill. Okay, but we have to pass the necessary journal entry to record the goodwill. So for that we have to think whether this person, they are asking only to pass the journal entry related to goodwill. So capital bringing entry, when a person comes into the business, obviously is going to bring some capital, which is already given in the question. That is how much? 5 lakh he is bringing as capital. That entries need not be passed because the question asks only as to pass the journal entry related to goodwill. So goodwill related, basically two entries are there. First entry is actually bank account debit to premium for goodwill. In admission chapter, when a person brings goodwill, that means the compensation from outside, this is the entry that you have to pass. But in this question, this entry will not come. What may be the reason? Exactly, the question doesn't say that they already mentioned that Ajay brings, that means the partner C brings 5 lakh as his share of capital, but they are not talking anything about bringing goodwill. But they have asked us to calculate goodwill. So in such situations, we have to assume that the partner has not brought goodwill in the form of cash. So this entry is not needed here. Okay, after bringing the goodwill, generally what we used to do is that amount will go to the sacrificing partners in their sacrificing ratio. This you are already familiar with. so I'm not getting into that deeply. Okay, so basically the meaning is, so we have to share it with the sacrificing partner. For that, normally we will pass an entry, premium for goodwill account debit to sacrificing partners capital account. I repeat, premium for goodwill account debit to sacrificing partners capital account. As the person didn't bring that amount in cash, we cannot pass that entry also. That means premium for goodwill account debit we cannot do. In that place, to share the goodwill, we will take the new person's current account. C's current account. Instead of writing what? Premium for goodwill account debit to sacrificing partners, we will mention C's current account debit to sacrificing partners capital account. It is not necessary that when a person comes from outside, always the old partners, both the old partners need to sacrifice. It may not be always like that, but there is a shortcut for this to find out whether both the people are sacrificing or whether only one person is sacrificing. For that, you check whether any extra information related to the share of new partner is given or not. Here they are only saying C is admitted as a new partner with 1/5 share in the profits. After that, they are not talking about how that 1/5 share came. So in the absence of such an information, you can take it like A and B or A and S is sacrificing. So you can easily write the entry first. Calculation we will do later, but first in order to write the entry, you can take it like this. So to A's capital account and to S capital account. Why did I mention capital account here? Because in the question they are not mentioning the method in which they are maintaining the capital account. Sometimes they will mention it as they are fixed capitals, or they are following fixed capital method, they are following fluctuating capital method. So nothing is mentioned in the question means you can transfer that money to their capital account, because we are assuming that they are following fixed capital method. You already know, you have studied that fixed capital method and fluctuating capital method in which chapter? In the first chapter, partnership fundamentals. So basically that is the meaning of this. C's current account debit to A's capital, S capital. Now we need to see how much compensation C has to bring. For that I would like to take you to this goodwill part, where 10 lakh goodwill of the firm we got. Now how to calculate this one? C's share of goodwill. C has to bring, right? So C's share of goodwill is 10 lakh into how much? Into his share. How much is his share? 1/5. So 10 lakh into 1/5, how much will come? 2 lakhs. Okay, 2 lakhs. So this 2 lakh is what he has to share with the other partner. So we will be writing here 2 lakhs. In which ratio we have to share? What is the ratio in which we have to share this? Obviously in sacrificing ratio. Sacrificing ratio calculation is very easy when there is no extra information related to the share of the new partner. Sacrificing ratio will be same like the existing ratio. Existing ratio means you can just call it as old ratio, in which A and S used to share their profits. Did they mention anything about the ratio in which A and S is sharing profit? No. So obviously old ratio will be what? 1:1. That you already know. We have studied that in first chapter itself. So first, so 1:1 ratio we have to share this. So old ratio. Now old ratio. Okay, if now other information related to the new partner's share is given, then old ratio and sacrificing ratio will be same. Old ratio and sacrificing ratio will be same. That means old ratio is 1:1 means sacrificing ratio also will be 1:1. Okay, so here this 2 lakh will be divided in 1:1 ratio between A and S. So A will be getting 1 lakh, B also will be getting 1 lakh. Narration will be goodwill credited to whose capital? A's and S's capital in the sacrificing ratio of 1:1. Sacrificing ratio of 1:1. Okay, this is the calculation here basically. So 2 lakh we have written, 1 lakh we have shared. Okay, so basically this is how you have to calculate this hidden goodwill. I hope this session was helpful for you to calculate the amount of goodwill. Thank you.